guys, this is San with Black Wall Street. I am here just to do a quick tutorial on how to find an option contract or where to locate it on the Robinhood app. I keep getting questions from a few of you about options trading or how do you find contracts or how do you trade. So what I would do is do a step-by-step just showing you one of the stocks that I've recommended today, how to go and find the contract that I'm telling you guys to find, how to actually purchase it, what to do when you're actually looking for the features of that option. You can do this with any particular stock that has options, that allows you to trade options. Now, not every stock will allow you to trade options. Some platform or some stocks will only allow you to trade that particular stock. That means you have to buy the shares. But most stocks, after it's been out for a few weeks, they will allow you to trade options. So here it is. Just give me a few moments and bear with me through this video. And if you have any questions, please post them in the chat forum. Thank you. Now here we have the ticker symbol F, which is the symbol for the stock Ford. As you can see, Ford right now after hours is trading at $11.01 per share. Now, if you also look at the bottom of the screen, it says today's volume. Today's volume on Ford transactions was 156,606,226, which is good volume for a stock. You want to make sure that the stock or option that you're trading has daily volume, and you want your volumes to be in the hundreds of thousands to the millions. Okay. Now, when you're looking to trade an option contract, what you would want to do is you would push the trade button. Once you hit trade, you're going to have option. You're going to have two, or if you already own it, you'll have multiple options to choose from. But you can either buy or trade options. If you want to buy the individual stock, then you will push buy. If you want to trade options in that stock, you're going to push trade options, which I am going to do now. So now we're here on the trade options. When you're looking at this, it gives you different, at the top of it, you're going to see there are different dates. This is called the expiration date for those contracts. Now, as I stated earlier in one of the posts I made on the Facebook group, that an option is a contract of 100 shares of stock. So instead of buying the individual stock, some people prefer to buy 100 shares in a contract, which we're able to normally get less expensive than buying 100 shares of that particular stock by itself or outright. Now, for this particular options on Ford, I am going to look at the March 19th options contracts. So when I get to March 19th, you're going to see there's an option to buy or sell. I am going to buy. I don't sell calls or puts. It's a little bit more risk. I prefer to buy to limit my risk. I can buy a call or I can buy a put. Now, if you're bullish, means you believe the stock is going to go up in value, you're going to buy a call. If you're bearish and you believe the stock is going to decline in value, you're going to buy a put. Right now, we'll focus on calls. Now, when buying a call, you can look at the different strike prices. Strike prices are the numbers on the side, which you can see $12, $11, $10. Now, when buying a call, if you go down, that's going to be, or if you go lower than what the actual price of the stock is selling for now, that's called buying a option in the money or an in the money contract. If you go up, that means you're buying a contract more than likely out of the money or at the money. So I buy my contracts both in the money and out of the money. I buy a lot of out of the money contracts because it's less expensive to buy out of the money contracts. Okay. Now, for this particular example, we'll use Ford, the $15 call. So $15 Ford call with the contract expiration of March 19th is selling for, or is going for 29 cents per share. So that basically means $29 per contract because there's 100 shares within that contract. Sorry about that. That means aftermarket hours just closed. So what I like to do when I'm looking at the different contracts that I'm thinking of purchasing, I like to go to limit price. Right now, as you can see, the limit price of the bid and ask is only a 1 cent differential, which is good. That means that's a tight window. So it's not a wide spread where they don't know what's going on with the particular stock. Now, another thing you want to do with limit price, you see the highlighted green bid and ask price. You want to click on that drop down menu. Once you click on that drop down menu, it brings up stats for that particular stock. The stats that I like to pay attention to are the volume, the open interest, and the applied interest. There's the Greeks down there, but today is not a day or not the day that I want to go over Greeks and explain all of the Greeks of an option. I want to just keep it basic. So you want to make sure that the stock has open interest. This stock has a great amount of open interest, which is 41,000, or this contract, I should say. This contract has 41,385 open interest. Volume is 11,252 on this particular contract. And that doesn't just mean everywhere. That just means right here in Robinhood. Now, the implied volatility is 86% in this contract. Now, I like the implied volatility. Anything above 50% to me is great. And the reason that is because that means there's going to be some movement in this particular stock. Now, I have no idea if it's going to be movement up or movement down, but I know there's going to be movement. My wish is for it to be movement up because I am buying a call, which means I'm bullish on this particular contract. Chance of profit says 10%. That's good to know, but we're buying a call at least 45 days out, so the chance of profit is spaced out from there. I'm thinking I'm not worried about getting to my break-even price. I'm just worried about this particular contract moving up in value. So if I want to buy this particular contract, because it's so cheap, what I like to do, I buy multiple contracts because that means I will double or triple my money faster. So because this contract is only 29 cents per contract, I may say, I'll buy 15 of them. Maybe I want to get $500 worth of this contract. So let's say 15. 15 is $4.35. I can buy a little bit more. 17 contracts at 29 cents. What I'll do at that point is I'll go ahead and buy these contracts. Push review. And then you'll see, I don't have enough buying power. How much I got? So it don't matter because I'm not buying. So review and then you buy. 29 cents, 17 contract would be $493. Okay. Now, if you bought this contract and it didn't execute right away, you may want to go and see what's going on. There's a chance that the limit price has risen. You will have to go and adjust your contract. Okay. So this is just a quick example of how to buy an option trade in Robinhood. If you have any questions, please post them directly in the comments section and I will answer each of them. All right. Thank you again for watching. You have a great one. Hey guys, I hope that video was informative and simple enough for you to follow. Now that you have the basic mechanics to actually look at the stats and purchase an option contract, you are ready to begin trading options. So if you have any questions, again, post them in the comment section below and I will answer each and every one of them. But since you're ready to start trading, let's go. Put some money in your account and let's start executing some option trades so we all can make some money. We are going to take over Wall Street. Come on, we're Black Wall Street. Let's get it.